Hello everyone, welcome to the series of videos on finance, lease accounting in Fision Asset. This is the third video of this series. So in the previous video, I went through this Excel file where I explained the different components of the monetary value of a financial lease. In the previous video, we did create the finance lease and we created the finance lease asset. We showed the addition accounting, this one, and the depreciation. Then I went to the Excel file to explain what is going to happen further after adding the asset, finance lease asset to Fision in the fixed asset module. So as per the lease agreement, organization is going to pay this amount every month to the lessor. And whenever they pay this amount, this has to be accounted properly. And how it is just a quick recap what we did in the last video. So this payment, I showed the calculation has two components. One is the principal component, and second is the interest component. And how it is calculated, I showed in the last video. So what is happening that when the organization pays $5,000 or the 5,000 whatever currency unit to the lessor, that 5,000 consists of the principal component and the interest component. Interest is basically an expense, whereas the principal component is going to set off the lease liability, which was credited during the asset addition account. This one. That means if we find sum of this complete principal amount over a period of the lease asset, the total should match with the total. This total should match with the complete lease liability. Let us see if that happens or not. So we can see here the total of the principal component and the lease liability both are same. So every month, this amount, it will keep on changing, will set off against the lease liability, and that's a systematic proration of the lease liability over a period of the life of the finance lease. And the interest part will be the expense. So this is where we stop. So ultimately what is happening, we are paying 5,000 and this 5,000 is against the interest and the liability. And this liability is against the lease liability, which we credited during the asset addition. Now let us see how this accounting gets generated in Fision Asset. So this part I had already covered. So after that, every month we need to run a process, calculate lease expenses. Once we do that, for the leased asset, this accounting will get generated. Now let us review this accounting. Here, lease liability debit 5,000, interest expense debit 1103.97, lease clearing credit 5,000, and lease liability credit 1103.97. This is not the same accounting which we discussed in the Excel file. Let us see what is the difference and how is it going to be, how the similarity can be made. So let me write it down, this accounting in the Excel file. So it says lease liability debit 5,000, lease interest debit 1103.97. Lease clearing credit 5,000. Lease liability credit 1103.97. Now, if you summarize this accounting, you can see it is lease liability debit, because this is the same account. Lease interest debit 1103.97 and lease clearing credit 5,000. So let us compare with the accounting which we discussed and what is created by system. So this is matching. Now this cash credit, obviously, right now fixed asset we are calculating the lease expense. We have not paid the cash. That is why the cash has not been credited. So how is this going to work? So this is the accounting in fixed asset. After doing this, we have to create a pay, because all the payment to anyone, lessor or any vendor, will be through accounts payable. So we will, when we run one process, which I will show in the later part of the presentation, then a AP invoice will be created, and the accounting of that AP invoice will be and when we pay this invoice, accounting of the payment will be cash. Obviously, cash clearing or cash, that again depends on the payable short setup, but final accounting will be this for that. Now, if we see here, lease clearing gets set off, liability gets set off, final is cash. So that is how this debit and this credit. Ultimately, we are going to get this accounting. That is how the complete cycle for the lease asset is completed for 1 month. Obviously, same accounting if it gets getting created every month. At the end of the lease period, this total amount will go to the expense, and this will total set off the lease liability which was credited during the asset addition. And that is how the asset will be fully reserved. Coming back to this presentation, so I hope this is clear. I'm going to show how the invoice will be created. But before that, I want to show, okay, this is the step which we need to do to create the AP invoice. We have to come to the manage lease page in the leases tab. Click on the generate invoice button. It will pop up a parameters window where we have to just select the book and the period and submit it. After submitting this, it will create a data into the payable open interface. And there we have to run the auto invoice, the payable open interface program. I will show that for the next, in the next slides. So before that, before I go, so that's a brief about how this cycle gets completed. Now I want to touch upon another aspect. And the aspect is like this. Since this asset are generally are long period, like this is of 65 years. So it may happen that after some time, lessor says that, okay, we agreed earlier for some financial term. Now I want to change the financial term. Earlier we said $5,000 for every month is the lease payment. But now I want to change it and I want to make it to some different amount. How is that going to be handled? When that happens, how we are going to handle that? I want to touch upon that aspect. So I closed the period March. Now current open period is April. So for the ongoing lease, when we go to the manage lease page and we come to this drop down, there are two additional steps what we can do for the ongoing lease assets. One, change financial term. The scenario which I just discussed, that we are going to change the, let us say, the lease, payment for the lease every month, or terminate, like abrupt termination of the lease before end of the lease period. So whenever that happens, we have to do the terminate this lease termination. So lease termination is nothing else but asset retirement. And change financial term is nothing else but the normal asset cost adjustment transaction. So let us handle one, that what happens, how we are going to handle if during the period of the lease, financial term gets changed. So we have to come to this page, select the respective lease agreement, and click on the change financial terms. So this was the earlier financial term where we said that payment will be of 5,000 every month for 60 months. Now, if you want to change it, click on the plus symbol. That's what I have done. And I created additional term where I said that after 6 installment, the lease payment is increasing to 10,000. So earlier agreement was that the 5,000 will be the lease payment every month for 60 periods. But now we are changing. We are changing like this. 6 periods will be for 5,000 and rest of 54 periods will be of 10,000. We are not changing the interest rate. We can change that also. But I'm not doing that. I'm simply changing the lease payment. So once that happens, so we have to edit the financial term here. Then post it. When we post it, system recalculates the lease amounts. I will show that in Excel. And then we have to submit. Once we do the submit, it will post the adjustment. Now let us come back to the Excel file. So this is the original lease schedule what we discussed. I simply copied it and created another Excel file, same Excel file, but now I have changed the payment from here. Up to 6th period, payment was of 5,000. Now from 7th period, payment is expected to be 10,000. And we have closed this period, first period. We are on 2nd period right now. This adjustment has been done on the 2nd. Now, how this is going to work now? So the moment we change it, now we can see in the previous original lease agreement, at the beginning of the 2nd month, the opening lease liability was this. I have copied that here. But now, as per new lease terms and conditions, the opening liability at the beginning of 2nd month, because this is where I am doing the adjustment, so we have to consider that period, becomes this amount. This Excel is auto-calculated, so this amount will be the opening liability. Initially, the opening liability was 261,057, but now after changing the lease agreement, the opening liability of the 2nd month is this amount, which is 497,424.4. So there is an increase in lease liability, and the increase is by this amount. 497,424 minus 261,057. This is the amount. The amount is 236,366.99. So my lease liability now increased by this. So obviously my asset cost will also go up by that. So the accounting entry for this will be asset cost debit and lease liability credit. Henceforth, all the other like principal and interest will change according to the new lease. I will come to that once I show the adjustment accounting. So once we post the adjustment, we can query the asset in the inquire asset task. We can see adjustment transaction is created. It shows what was the earlier cost, what is the new cost. And when we check the accounting of that, this is the accounting. This is the accounting of the adjustment transaction. Cost got debited, lease liability got credited. And this is what we discussed in my Excel. Okay. After that, we are going to do the calculate lease and calculate lease expenses, and that will generate this particular accounting for the month of April. You can see for the month of second period, the principal component is 2927, whereas the interest component is 207. Interest is 2072 and balance is the principal. So I hope this is clear now that how, if there is a change in financial term of the lease, how we are going to handle it. So there are two options. One, if there is change in the lease agreement, we have to use the change financial term, which will create cost adjustment transaction on the asset. Second option, second thing, what can happen that we can terminate the lease before the lease expires. In that case, we have to use the terminate lease task, and that will create asset retirement transaction for the asset. Now, so far we created the asset addition, the lease expense calculation, then the change in the lease terms, then how adjustment transaction gets created. Now I would like to show the integration with payables. So now the period open is June. Click on the calculate lease expenses. This will calculate the accounting entry, this one, accordingly for whichever period we are doing. So this is the accounting we can see. Let me see for which, this is for the period of June. That means 1, 2, 3, fourth period. For the fourth period, the principal amount is 2951 and the interest amount is 2048. 2048 and the rest is the principal. So system will create this particular accounting. As I said earlier, now we want to create the payable invoice so that we can do all these accountings. So what we need to do, we have to come to the manage lease page, go to the lease, click on the generate invoice button, enter the parameter, click on submit. This will spawn two programs. In fact, it will submit one program. The first one, generate lease payment invoices. And since we have selected transfer invoice as yes, so it will spawn another program, transfer lease payment invoice. So these two programs will create the invoice data in the interface, payable invoice. They will open invoice interface. After that, we need to submit the import payable invoices process. We have to submit this process. That will trigger import payable invoice, and obviously there will be a report. Now we need to ensure that there's a parameter for the import payable invoice process. The parameter name is source. The source we must select as asset. When we select the asset, it will take the data which has come from fixed asset for the payable invoices and create the invoice. It will generate output, the report. We can see it has created an invoice. Invoice number is prefixed with the lease name what we had, master. Period is June. The amount is 5,000. And once invoice is created, we can query the invoice in invoice workbench. You can see here. That's the invoice. and it has created a item line for 5,000. The account distribution account for this particular line will be the lease clear. So when we account this invoice, the lease clearing will be debited and liability account will be credited. This was the accounting from fixed asset. Now, when we created the AP invoice, this accounting will be created for the AP invoice. Now, let me just write it here. Accounting from asset. Accounting from AP. This is for the payable invoice. This one is for payment. I'm not going to discuss the payment step. I just showed that invoice is created. So when we create the accounting of that invoice, this accounting will be generated, and downstream transaction payment we have to do, and at that time cash will be credited. So this completes what I wanted to show. I hope this series of videos is helpful. Do pass your comment if you find something incorrect in this series of video which I have shown. Thanks a lot for watching. Bye for now.